이어지는 순서로는 패널 토론 이어가겠습니다. GBBC 산드라 로 CEO님의 모더레이터 진행으로 바이낸스 스티브 킴 에이펙 디렉터님과 카이코 아담 모건 글로벌 지수 부문 책임자님 그리고 레이어 3 아드리안 입 토큰 리드님께서 패널로 함께해 주실 예정입니다. 이번 주제는 기관 도입, 토큰화 ETF 및 향후 10년이라는 주제로 토론해 보겠습니다. 네, 이번 토론은 토큰화된 ETF와 디지털 펀드의 확산이 전통 금융에 어떤 변화를 가져오는지 살펴보고 규제와 리스크 이슈 그리고 향후 시장 주류 가능성까지 함께 논의해 보겠습니다. 네, 이 또한 우리 무대가 준비되는 대로 바로 시작해 볼 텐데요. 우리 모더레이터님 그리고 패널 분들께서는 우리 마이크의 버튼은 누르지 않는 걸로 주의해 주시면 감사하겠습니다. 네, 이렇게 무대가 완성된 것 같습니다. 그럼 모더레이터 및 패널 참여자분들 무대 위로 모시겠습니다. 여러분 힘찬 박수로 환영해 주시기 바랍니다. 네, 우리 테이블에 준비된 명패를 보시고 착석해 주시면 감사하겠습니다. 네, 산드라 로 모더레이터님 준비되시는 대로 시작해 주시면 되겠습니다.
Hello? Okay, yes. Hello, everyone. Good afternoon. Thank you for joining us. And I am very sorry, my Korean is terrible, so this session will be done in English, and I appreciate your patience with that. First of all, I'm delighted to be here alongside my esteemed panelists. We're going to be talking about institutional adoption, tokenized instruments, including ETFs, and what's next, particularly next decade, though really in crypto world, 1 year is a decade, so perhaps we'll do the short term because a lot happens in our world. So let me start off with just going down the row here. Steve, if you could start, just a quick intro of yourself and obviously your institution.
Hello, everyone. My name is Steve Kim. I am a director of APAC at Binance. I've been with the firm for about 3.5 years by now. Before I joined, I used to work in TradFi, derivatives, FX for about 10, 15 years. I think that's my intro.
Hey everyone, I'm Adam Morgan McCarthy. I'm head of research at Kaiko. I've been with Kaiko for the past 18 months. Before that, I worked in media, so I worked across several different crypto media outlets, including The Block and DeFi Llama's Newsarm, and prior to that, I was in a startup, all in crypto in the last 5 years. So I think if we're going on like a year on crypto is a decade, I'm coming up on retirement soon. So yeah, a lot to share. Hopefully, interesting panel ahead.
Hi, I'm Adrian. I'm the token lead for Layer 3 Foundation. We're an InfoFi aggregator on different chains. Currently, we serve around 250,000 customers a month, and we work with over 800 different protocols. Before joining Layer 3 as the token lead, I was leading APAC efforts for a market maker called Keyrock.
Great, and I want to take us back 10 years. I will tell you, a decade ago, when I was at CME Group, thinking about launching Bitcoin index products and the futures product, that seemed really wild and radical. And now today, we're talking about crypto ETFs. And my first question is going to be directed at Steve to kick us off. As you look at this space, what is driving some of the institutional interest and adoption, particularly around crypto ETFs? In APAC?
So I think this trend is truly global. Let me take it back. As we all know, crypto, Bitcoin, is very unique. As at the inception, it was traded among the retails first, as opposed to other TradFi products that was mostly traded by the institutions, right? So there was a sense of FOMO, I think. But I think what drove the true adoption and mainstream adoption was the clarity in regulation. The first ETF, to my knowledge, was started in Canada. However, the true meaningful expansion started when the US market allowed ETFs, Bitcoin ETF, Ether ETF last year. And since then, the sensible investors would try to look at the product asset class, the crypto as an tradable asset class, for two reasons. It was a great hedging mechanism against inflation, and also it was justifiable asset class in terms of portfolio diversification. So there were enough interest in the product already. It's just that there was no clear ways to trade. And now in APAC, Hong Kong and Singapore are leading the race by allowing ETFs. Obviously, other nations within APAC are reviewing as well. So now with the clarity of the regulatory framework, crypto being truly attractive tradable investment tool, I think it was rather natural for sensible investors and institutions to be interested in the product.
Great, thank you for that. And I do agree with you. There was a lot of pent-up interest and demand just waiting to happen, and it's now full on. I'm going to go over to Adam here to talk about how does market data and what Kaiko does help, I guess we could use the word legitimize, but also just make the concept of crypto ETFs even more mainstream.
Yeah, for sure. And I think I'll kick off with a little quick intro on Kaiko does. So we started just over a decade ago as kind of a straight up market data provider, providing trading volume, liquidity, order book data across a handful of exchanges that were around then. I think one of our first we still have data on Mt. Gox, for instance, and we started off kind of from humble beginnings, but as the market legitimized, and we always kind of built with that in mind, this institutionalization that we're seeing now, we started using that data that we've been collecting to build more derived products. So when it comes to the institutionalization and building products around that, you need to have several pillars for that. And one of them for us is independence. We're not tied to any exchanges, so we're independent. Ability to kind of give a read on the market that isn't going to be influenced by who we're tied to, who we're owned to, or a family kind of parent company. And secondly, we also look at sort of the different availability of pairs. So if we're trading a reference rate or a price for an ETF, if it's in the US, it's going to need a US dollar pair. So Binance has got USDT. Right now, you can't do a rate on that, sadly. So the biggest, most liquid market, and it caused issues. And it was I think the new regulators and the new commission in the US is catching up now on that. They're realizing, hey, we're going to need to kind of get more comfortable with these things. But for now, it's got to be fiat. So I think when we look at rates, we look at where we can trade fiat to Bitcoin, fiat to ETH, or so if it's in Korea, can we get a KRW pair, and so on, and fixing rates on that. So we look at liquidity as well as that. So not just the availability of the pair, but can you actually trade that in size if you need to settle a significant asset. So those are kind of some of the key pillars: liquidity, availability of pairs, and independence and transparency.
You raise an excellent point. Beyond obviously transparency, the point of liquidity and how much liquidity is in ETFs is incredibly important. I'm going to round this first set of questions with Adrian. You spend a lot of time, and maybe you should unpack a little bit on layer 3 in case there are folks who are not familiar, but the user experience and incentives, how does that shape the way crypto ETFs are developing?
Yeah, so just a bit of background about layer 3. If anyone's kind of think of Kaito and Galaxy, which you can basically interact with different protocols on the platform and educate. This is basically what layer 3 does. We basically trust ourselves as kind of like the Google search engine of crypto. If you don't know about crypto, you can go on, learn about deposit, swap, impermanent loss, TVL, all these kind of different terms. So if you really think about how protocols have been incentivizing people to use, it has mainly been through 2 actions. First one is basically deploying money into liquidity pools in the hopes of getting rewards. And the second one is any kind of on-chain transaction in the hopes of getting rewards. And most of them are not. Last cycle, these rewards are basically backed by no real yield. I think with the introduction of tokenized ETFs, we see a lot of people or even institutions being interested into these kind of assets, actually safe to interact these kind of assets, right? You see the likes of like KKR, Hamilton Lane, these guys issuing these kind of tokenized ETFs. So, I mean, for us, like we think when it comes to incentivizing people to use or to be more inclined to these products, it has to be through very well-crafted educational platforms. I think platforms like Kaito, Layer 3, they all serve as very fundamental pillars for mass adoption. Since if you just have a Twitter account, you can interact and talk about the protocol and basically get rewarded for that. On Layer 3, you can do on-chain tasks, basically created with different institutions to learn about these projects, to know about the security, what's the underlying asset, where the yield's coming from. So for us, I think while these InfoFi developments of these platforms do evolve, it will serve as a core pillar for people to understand more on tokenized assets, which basically lead to democratizing on investing in the future.
Thank you for that, Adrian. And you used a very key word around investors feeling safe and issuers feeling safe. I think that safety component is incredibly important for trust to then be built as there's new products are then developed and built. And I'm going to turn back over to Steve to talk a little bit about, how does Binance and the role that you currently sit look at how you provide not only those responsible products and or medium for that, but also then balance that with innovation and continually innovating with new products, because we can't be stagnant in this space either.
Right. So when I first saw that question, I was thinking, how can we coexist regulation and innovation? Because oftentimes people assume that it's impossible to have both regulation and innovation. I think that was truly a questionable issue in Korea. When there was an announcement about tax, certain regulations, market participants have complained a lot about how it might kill the industry completely. But now we see, especially through the case of the U.S., clear regulation could actually mean innovation and expansion of the industry. With that said, Binance, for Binance, regulation and innovation isn't two separate things. As the largest exchange and ecosystem, we've made a lot of investment into compliance. Right now, to the date, we have about 1,400 employees for compliance. That accounts more than 22% of total headcounts. So any investments into compliance, I think, that could lead to an innovation. Another example I could give, so proof of reserve. That's the concept that was prevailing in the industry, but through our own brand name, Safu, we were able to first introduce the concept of proof of reserve that could be verified on chain. The more investment into compliance regulation eventually would lead to innovation. So I think we'll continue to make such an investment and be the market standard, and that will naturally lead to innovations and preserve that.
Absolutely, and I agree that business likes certainty, and having regulatory clarity allows for rules of the road and actually will increase the opportunity set, not decrease. So I agree there's an increasing mentality that is a good thing. I'm going to go over back to Adam about your role in developing indices and how that is building confidence in institutional interests and markets. Can you talk a bit about that? Why are indices so important?
Yeah, I think if you're looking at institutions that are coming in and want to transact and kind of be active in crypto markets, there's several reasons why indices are so important. I mean, the main one is what we've touched on with the ETFs in the US. I mean, without a benchmark rate, you can't have that Bitcoin ETF that's bringing in all this volume and this activity. It's the same in Europe, where Kaiko is the biggest provider of benchmark rates for ETPs. We wouldn't have that confidence in investors being able to go in and trade those. And it's not just ETFs as well. You know, indices are important beyond that in derivatives and futures, which you haven't got here in Korea yet, and it's sort of a liquidity gap. So in the US, SIBO just announced the launch of its first kind of perp-like product in continuous Bitcoin and Ethereum futures. We're working with them on that, giving the rate and doing the index. I'm not going to plug all day, don't worry. But it's important because it allows institutions to say, hey, here's a traditional player, one of the kind of main markets for trading in the US globally, historically, and they've got this product that's going to be accurately priced. The continuous future, it's actually the first thing that crypto, I think, has really innovated at scale, and that's translated across into traditional markets and improved upon what they have. You reduce rolling costs and things like that. So that's where indices let people kind of move in and come in and act in the market with confidence. I think it's one of the most important things. Beyond that as well, we work with several funds who can use indices as benchmarks. I think every couple of months or every year you get a story from Bloomberg. We've got an excellent journalist there who covers the hedge funds, and he'll come out with hedge fund returns, and everyone will respond like, oh my God, AQR haven't even beaten the S&P. And it's funny, and people joke about it, and it's not, the goal. But these different funds do benchmark off different things, whether that be MSCI emerging markets or whatever else. So indices, we allow that sort of framework and structure that happens in traditional markets translate into crypto now. Because those guys want to be able to do what they do. They want to have it simple. Sometimes we've, in the past, tried to reinvent the wheel, but I think giving them the framework that they're comfortable with, and they can come in and seamlessly transact, makes it better.
Yeah, and I think that's a key thing to remind everyone that oftentimes, if we want institutional adoption to happen, there's got to be what I would call, the benchmarks, the ability to be able to rely on index or pricing or mechanisms and risk frameworks. And all of these components need to come in as institutional adoption develops. And in the last part of this conversation, before I move on to the next piece, I would love for Adrian to talk a bit about, great, we got institutional adoption coming. There's a lot of big names coming into this space, but communities are important. So how does that all tie together from your perspective?
Yeah, so it's great that institutions are coming, and it's great that right now retail can have access to all these different instruments that usually you don't have access to. So just for example, the KKR credit fund, usually when you're in the US, you have to be accredited investors with net worth of over US $1 million to invest. Right now, you can go on chain and invest with a minimum of 20 grand. So I think with the introduction of tokenized assets, people need to understand that firstly, it's transparent. You can track everything on chain. Second thing is you're removing the middleman, which means faster transaction. And the third one is instantaneous settlement. These are the benefits of these tokenized assets. So when communities do understand the benefits of holding these assets on chain, clearly they could give product feedback, and without actually just thinking about speculation of crypto, you're actually buying into something that's tangible, and you're able to trade it better than ever. So I think with all these institutions obviously releasing all these products, it's always good to have communities rally behind them, because community feedback is important. And obviously these tokenized assets are trying to solve problems that you can't do, you have in the real world, right? So I would say communities are super important on this front. Rather than just looking into the subset of just crypto users right now, it's also very important for mass adoption for platforms to basically educate and onboard users. I think that's why Layer 3 was created in the last 4 years, trying to democratize the access and the bridging between Web 2 and Web 3.
Great, thanks for that. And it's a great segue, because the next question is, I don't know that it's controversial, but to be fair, I think let's think about pension funds and people's, in the US it's 401ks, your retirement savings. There is a lot invested in traditional ETFs right now, and mutual funds, and lots of what I would call, very familiar old school funds. With the advent of tokenized funds coming in, what do we think are the likelihood of some of this displacing or disrupting traditional ETFs? So I'm going to open it up to the panel here to take that question on, because I think that disruption element may be very interesting for retirement funds in particular over the coming years. And we're talking about trillions of assets.
Sure, I'll take the first.
So which is going to win? Are we going to have tokenized ETFs take over?
I think we need to distinguish, the timeline, right? Obviously, the tokenized treasuries, MMFs, they have competitive advantages. So far, the fractional ownership, the 24/7 trading and settlement, these were some of the features that were just not provided through the traditional ETFs. However, with the introduction of the tokenized treasuries and ETFs, and these shortcomings have been overcome. So there is definitely going to be traction in the short term, but does it going to truly replace? I am somewhat skeptical. There will always be a population that are just resilient to the changes. In your daily life, some might prefer doing a paper application over digital application. And for me, I don't think it'll be fair to just leave those out who cannot be apt to the new technology. So in short, I think it's definitely going to be a breakthrough technology that will be gaining traction, but it cannot completely replace it.
Thank you.
Yeah, I think I totally agree with that, and I would build on that in that I think actually ETFs and tokenization kind of compete in a way in that they're kind of boat wrappers. An ETF is allowing you to kind of get that exposure to an S&P 500 or to a cross-asset, gold and Bitcoin, or a fixed income and whatever it is. So they kind of work in a similar fashion. And the ETF, 18 years ago there was only several billion in ETF AUM, and now there's trillions. So it's it itself is actually a revolutionary technology. So we have to kind of recognize
That's right.
that.
2 decades ago, it was innovative.
Yeah. So we're not going to replace. I think we're going to, it's symbiotic in a way, and I think there will be a portion of those ETFs that are probably tokenized, so that you can bring it on chain, as we're seeing now with tokenization of stocks, and it's valuable for exchanges, and people want to transact that way. I live in France, and I have 5 different exchange accounts. When I come to do my tax declaration at the end of next year, that's going to be a real pain. So if you're someone that is already on Kraken or Gemini or Binance, and you want to buy a tokenized stock or a tokenized ETF, but you don't want to go and set up a brokerage account, you don't have Schwab, you're 20, you don't want to use some stuffy boomer website, you're probably going to prefer to go for a tokenized ETF. So yeah, I think there's a growth opportunity there, but it's going to take some time. And I think that the two things will work in tandem. I think more broadly, the benefit of tokenization will come for actually those fund admin guys, the asset managers like Fidelity, just launched on Ethereum. And you're seeing that they're seeing the benefits of that ability to kind of transact and move assets at scale quickly. So yeah.
Great. Adrian, I'm going to, unless you had a comment, I was going to ask you a slightly different question. Okay. So on the similar topic though, when you are addressing, questions and educational topics, are you finding that it's an and situation or an or situation?
In that capacity?
In terms of, yes, tokenized ETFs eclipsing traditional ETFs.
Yeah, so if you look at the history, when there was financial crisis back in 2008, BlackRock bought out Barclays Investors, and they basically introduced ETF as basically the path of investing, right? So I think, and now it became the mainstream of investing through pensions. So I think it's kind of see all these democratizing of investing will get further and further, and it will come at an age that some pension funds are already adopting Bitcoin ETFs, ETH ETFs, and I expect to see more niche opportunities that pension funds are able to find more niche and basically bullish opportunities on behalf of investors to invest in. So it's definitely a when question rather than no.
Great. When we look at how quickly these large institutions, brand names have adopted tokenized money market funds and various treasury products. Has that surprised you at all, or do you see this as sort of a natural evolution that's now occurring? Do you see it accelerating? Do you see any potential pitfalls that we need to look out for? Adam, you're shaking your head, so please go ahead.
I'm happy to jump in. Yeah, I think it's like, it feels like it's happened overnight, but I remember writing about I think Banco Santander doing a sort of pilot program on tokenized bonds 6 or 7 years ago, and then these things had slowly and then suddenly all at once. So I think it makes sense for these firms. They can save money, it improves liquidity. You saw the first week out of hours repo agreement happen on a Saturday a few weeks ago with JP Morgan and DTTC involved on the Canton network, and that's not like an accident. It's because it makes sense for these guys, and if it makes sense, if they can save money, they're going to be there. So I think it's only going to accelerate, and it's going to just continue to kind of ramp up.
Yeah, I agree. Sometimes I think it looks like it just happened, but reality is underneath a lot of work had been happening for quite a while. It's just you didn't hear about it. Steve, do you have any thoughts on the institutional adoption acceleration? Do you think that timetable just keeps going? Do you think the momentum is here now?
Yeah, I definitely do agree that it's only being accelerated. So I was having a chat with my CEO yesterday. The exact question was do you foresee USD stablecoin dominating the stablecoin? You may see what's the relevance here. So the proportion of U.S. economy to the global capital market is only increasing. It's almost around 50%. The rest of the world is having its own problems here and there. So we sort of agreed that the influence of the U.S. On the global capital market will be only increasing. And because they want to pave the way for digital transformation, we think it will be just a matter of time to become contagious to the rest of the world.
Any thoughts?
Yeah, so I think a lot of platforms have been there for a while, like what you said. There's Tradable, there's Figure, there's all these micro instruments, private credit that people are usually not get access to. You can get access to it. You can even put out your home to get a line of credit just through tokenized products. So I think having to work at a market maker as well, there's all these tokenized market making funds, different derivatives that you can now trade as a retail. So I guess in my opinion, it's it will only go quicker, and retail will only love it even more because these are verifiable, actual real opportunities, which is very different to what people have been talking about in crypto. So I'm very excited for what the future holds, and yeah, I think it will only go quicker from here.
So first of all, thank you for those views, and I think it's very clear that we will see more institutional adoption and actually see that accelerate, not actually retrench. The one other thing to mention, I think, is in the US, there's been a lot of messaging around a golden age with respect to digital assets and blockchain. And I think that's something that should not be discounted because it is an absolute government level focus now. And so with that, I want to talk about Korea. Where will Korea lead and how can Korea lead? And so let's start off, actually it's a question for all of you. What do you think Korea needs to do or could do to really make sure that it cements its place in this golden age of digital asset development?
I think, Steve's probably the best suited because you're based here.
So although I've referenced a lot of US cases, Korea is actually have a lot of huge potential. It's a very unique, dynamic market. Retail adoption is probably one of the highest. The nation is genuinely tech savvy. I just have one interesting story. So when ETF was actually allowed in the States, surprisingly, all of the local brokers, they were ready to offer the product. There was no regulation back then, but people were already ready. They've spent tons of resources and time to be able to brokerage that to institutions and retails. Unfortunately, their efforts didn't make much of a result because there was no clear guidance or regulatory framework. With that said, with the transition of the administration, I think they're more pro-crypto. Korean people are oftentimes, called to be hardworking, and we use the term "빨리 빨리," right? So there is a inclusive sets of regulation under the name of Digital Asset Basic Act awaiting. As soon as that is being passed, I think Korea will definitely have its own momentum and provide a lot of new innovations.
Thank you for that.
I think building on that as well, and about the point you made on retail, we see that in the data all the time. I think the second largest fiat currency by traded volume, just after the dollar, is the Korean won. So I think it's $600-700 million US dollars if we were to translate it already this year. And that's not a kind of one-off. That's every year. There is more volume happening here, and it's retail driven than anywhere else. I think that's one thing as well I've been impressed with in my last few days here for arriving. The energy is really there, and the retail have kind of taken it to a level, and now I think it's kind of for the institutions in the next stage to take the ball and run with it when we see the kind of adoption of the market more broadly in terms of futures and derivatives. I think that'll be the big thing, that we see more liquidity come in, more ways of trading, and then you get even more volume. Can potentially challenge the US market in terms of size eventually. I mean, we saw what happened when ETFs came in the US. The CME became the largest Bitcoin futures market in the world. I think over 12 billion open interest, bigger than Binance, bigger than anywhere else, which was based on the ETFs. So I think that there's an opportunity there for Opbit and for Bithum and these other exchanges that are in Korea, that when you get those derivatives markets and when these things happen, I think what it'll come down to as well is potentially maybe opening up to more broader markets, so you might see more exchanges coming in here, and that liquidity will increase. I think it's really exciting, the future of Korea.
Adrian?
Yeah, extremely bullish as well. I think having to talk to a few exchanges here, I think the government has allowed them to slowly maybe considering opening up accounts for institutional accounts, so that corporate or listed companies in the Kospi could basically adapt holding Bitcoin as part of the treasury. So I think it's a great diversification allocation which you can have, which is already apparent in like Japan, Hong Kong, US. So I think Korea is definitely on the forefront. And knowing that Opbit, Bithum, CoinOne, all these other crypto exchanges are very open for international projects to come visit and list on their localized exchange. I think having more institutional players, traders in, could also boost liquidity in the market as well, so that the Korean market can benefit from it. So extremely bullish on how it's going, especially the KRW stablecoin initiative as well.
So I'm going to echo the sentiment across the board here, which is right now in this moment, there is bullish sentiment obviously coming out of the US, but there is also bullish sentiment about South Korea. And the number of institutions that we know, and GBBC has more than 500 institutional members, we know who want to invest in Korea and actually have people on the ground. We've just added someone on the ground. A colleague is now here in case you want to ever speak to him. We are seeing more and more companies and entrepreneurs wanting to invest here, and I think provided there is that clarity on regulatory guidelines, provided there is the conducive atmosphere to be innovative in this space, you will see foreign investment into South Korea. And I think further to that, as a final note from my side, is a US, Korea, plus other countries, of course, digital corridor partnerships are going to be key to developing cross-border alliances. And I think that's another key area where we'll be supporting. So I look forward to further engagement on that. In our last 3 minutes, I'm going to give each of you a minute. I'd love for you to kind of answer the question of, and it was originally by 2030, that's like, 5 years away, 4.5 years away, what do we see? Tokenized ETFs or tokenized money market funds? You can take whichever tokenized version you see, but what do you see by 2030?
Yeah, I'm happy to kick it off. I think by 2030, we're going to see a lot more competition from the traditional players in finance. I think possibly a little bit more consolidation as well. There's a lot of firms in crypto. There's a lot of tokens in crypto. I think we're seeing it in this market right now where things have been a little bit top heavy around Bitcoin, and we just saw recently more a shift towards altcoins. People like kind of the liquid assets and quality, so I think we'll see in the next 5 years a little bit more focus on the kind of main assets. I think we think there's probably around 10 to 15 assets that are truly tradable at scale right now. So I think the future is going to be a little bit more narrow but more efficient, and there's going to be a lot more opportunity for investors.
He's calling for the Hunger Games. They will commence. All right.
Yeah, so in my head, like everything will be tokenized. Currently, like if you look around, there's a protocol called cards. Even Pokemon cards are tokenized. And I really feel like at the end of the day, even buying a car, you could get an NFT to redeem your car. So life will be easier. It will be an open ledger. Everything's data verifiable, attributable, and will make transactions way quicker and cheaper.
Amazing.
Yeah, as we all agreed, I'm very bullish about the future of Korean digital asset space. So by 2030, I'll say the entire transactive volume through tokenized ETFs would have surpassed the traditional ETFs. We'll definitely be seeing new classification of investors, new sets of regulations, but I think all those will be moving in the positive direction by 2030.
Well, you heard it here, everyone. We are going to see a lot of growth, a lot of opportunity. So we just have to make sure we keep bad actors out and the good actors in. So with that, I want to thank our panelists for a truly engaging conversation. Thank you very much.
네, 감사합니다. 귀중한 토론 함께 해주신 산드라 로 CEO님, 스티브 킴 에이펙 디렉터님, 아담 무건 글로벌 지수 부문 책임자님, 그리고 아드리안 입 토큰 리드님께 다시 한번 힘찬 박수 부탁드립니다. 네, 토큰화된 ETF와 디지털 펀드 확산이 가져온 변화, 나아가 미래까지 함께 엿본 시간이었습니다.